All right, we are live. I'm glad to be back on streaming. I actually had some technical problems. This is actually my third attempt at starting this live stream. But anyways, enough about that. I wanted to give you guys an update on inflation. It's been a while since I talked about it, but I saw a couple of headlines in the news that might have gotten your head spinning, and we're going to talk about that. Namely, uh, inflation expectation on the part of consumers has hit a historic high. People are really scared about what's happening with the economy. They're scared about the prices. And there was an article about that. On the other hand, there was a release last Friday from the Labor Department about the actual increase in inflation, right? And so uh, you might be wondering, how do I reconcile the two things? So we're going to get into that. So let me first talk about this thing right here. So the headline news read, U.S. inflation, U.S. consumers' inflation expectations highest since 2013. The New York Fed said. So obviously, we're talking about a survey, not an analysis of economic data. But considering the fact that consumers are definitely connected to the economy and they're making their purchasing decisions and spending decisions based on their expectations, right? We would imagine that there, in fact, is some impact on what happens to the economy based on that, you know. And let's take a quick look at the data right here. Um, Oops, sorry. Oh, there it is. Sorry, I'm clicking on the wrong things here. It's been one of those days. Sorry. So, this chart is it's inflation expectations from 2013 to the current period, right? And reading the title, consumer expectations for how much prices will rise over the short term and medium term are the highest they've been since the New York Fed launched this survey in 2013, which is actually, so now it's the highest since they've actually done the survey, right? And they make a distinction between medium 1 year and medium 3 year ahead. Um, and one interesting thing is that toward the end of this chart in our current period, consumers are expecting higher inflation rate for the 1 year term, the shorter term versus 3 year. So you might be a little bit concerned about this. If people are expecting prices to go up, does that mean that they buy things now, right? Are they stocking up on Amazon or something? Or are they expecting that prices will go up and they will actually start hoarding their savings, right? Reducing their spending in anticipation that things are going to cost more, so they have to build up their savings? Well, American consumers don't really do that, but that would actually be a rational response. But let's take a look at the actual data, or I should say, an actual study about the relationship between consumer expectations about inflation and what happens to the rest of the economy, right? So, this is a study that I've referenced before in my updates on inflation. And long story short, I'll make it brief, okay? This chart is showing the 5 year and 1 year inflation expectations versus the actual inflation rate that was recorded by the Labor Department. And the truth is, actually, consumers are not very good at anticipating future inflation rates, right? Now, it's about forecasting the future, and no one's good at that. Not even economists are good at that. In fact, economists are only slightly better than this. But the point to be made in this live stream is that no matter the expectations on the part of consumers, sometimes they get scared by the headlines, which is why I'm doing this, why I'm starting this channel, right? A lot of the clickbait, headlines, and so their expectations are influenced a lot from hype and just people talking and being worried about the future, right? And so there is a quantitative, measurable disconnect between consumer expectations and what actually happens to the economy, right? No matter the fact that they have an impact on the economy because of the fact that they are spending, right? So, So that's that with regards to the inflation. But now the question is what really happened, right? Because everyone was anticipating the inflation numbers that are coming out last Friday from the Labor Department, because there has been this policy question hanging in the air, and I've talked about it innumerably in my other inflation videos, which is the current rise in inflation permanent or short term, right? We're talking about a temporal problem, right? And that is the big question. And we're starting to get a glimpse about how it's going to go, right? So let's take a look at that, okay? The Labor Department, on Tuesday, um, this was on Tuesday, suggested that a surge in Delta variant coronavirus cases was weighing on airline and hotel rates, but also showed that price increases for key products like cars were beginning to moderate, helping to cool off overall inflation. Okay. The consumer price index rose 5.3% in August from a year earlier, the data showed. That was a slightly slower annual pace than the 5.4% increase in July. Now, you might quibble about this and say, this is an index that's an estimation of price, right? And a 0.1 difference is really numerically, it's really not a big difference, right? It's 0.1%. But the point is this: the expectation among Wall Street economists, right, was that the increase in prices and overall inflation was going to continue, and in fact would continue to be substantial, right? So let's take a look at the data. So the line that you need to pay attention to is this 5.3 figure right here. This is the overall CPI, Consumer Price Index. This is different measures of Consumer Price Index, where certain parts of the equation are taken out in order to measure things like what happens when you take out medical services, rent, primary residence, shelter, etc., etc. There's a debate about whether housing prices should be a part of the CPI or whether it should be rent. And let's not get into that. I talked about it in some of my other videos, but the bottom line is that you see this curve right here, right? The overall rate of inflation, it's starting to curve downward. Now, as an economist, I hasten to add that, this is only 1 month, right? When I'm doing calculations in Excel or whatnot, I need to see at least 3 months of a trend to say that is in fact a trend, right? But this is in fact welcome news, because we thought with the pandemic and the lockdown and the supply chain management problems that all we're going to see is an upward trend in prices for now, right? I've always contended, in fact, the vast majority of economists have said, look, these supply chain problems are temporary. They will smooth out, but I personally thought that it was going to take until next year until that happened. But for this drop to happen now is not only gratifying, but it's a positive sign for the economy that it's not simply a matter of prices cooling, right? Hopefully what we're seeing is that the supply chain problems are starting to ease, right? So digging further into the numbers, right? The news on core inflation, which strips out volatile food and fuel prices to get a cleaner read on underlying price trends, was even more encouraging for policymakers hoping to see signs that price increases are slowing. That index picked up 0.1% on the month and 4% over the past year, down from 0.3% and 4.3% in the July report. Okay, so again, it certainly appears that we are talking about pretty minuscule numbers, but I mean this is impactful to the economy. And the point is that two things here, right? First, let's talk about core inflation, right? The reason why they strip out food and fuel prices is because you've seen what happens at the gas station. You try to pull up and fill your gas, and sometimes those prices are bouncing up and down. What happens, with in the Middle East? There's a war, OPEC, and also it's the same thing with food. With seasonality and the weather conditions and production and supply chain problems and all those things. So, in order to get a gauge on the long-term experience of consumers, sometimes economists will strip out that portion of the equation, right? That adds up to the consumer price index, and say this is likely how consumers are feeling, because these prices are the long-term trend that people experience in their day-to-day life, right? So that's really the whole point of it. And the fact that it still went up, right? The core inflation went up, but the fact that it went up by only 0.1% means that at least for August, things have started to cool down, right? And remember, the point of all this in saying this is, let me bring up some more data on the screen. This is the consumer price index month-over-month percentage change, seasonally adjusted. I talked before about what seasonally adjusted means. And the percentage change for month-over-month was 0.3, right? So definitely a decrease. You can see the trend here. We've had since October of 2000. October 2020, we've had a steady increase in price. There was a slight dip here, but you can see that the percentage change. Okay, so remember, this is the percentage change, not the actual number, right? Basically what it means is that the rate of growth, the rate of increase in inflation, has started to moderate. It has finally started to slow down, right? So I definitely would say that this is, only 1 month trend or a few months trend. We need to keep monitoring the data itself, right? But the final statement that I would want to leave with you is this quote right here. We're seeing the unwinding of a lot of factors that pushed inflation prints higher early in the summer, said Guy Libas. He is chief fixed income strategist at Janney Capital Management. We'll see these rolling supply and demand imbalances gradually diminish into 2020. And this, in fact, has been the consensus of economists from the very get-go, right? We've been saying, look, there's been a lockdown. There's a global pandemic. Are we surprised that there are supply chain disruptions, that there are inventory shortages, right? COVID restrictions and health protocols and all that kind of stuff that we've talked about a lot, right? And so as we see those problems ease, as businesses start to work out solutions to those problems, it was our understanding that those price increases would moderate. And we're actually seeing that in the August data. Again, saying that we need to keep an eye on this trend. But this is an encouraging sign, okay? If you're worried about inflations and prices going up, look, I started this channel because I saw this ridiculous headlines and seminars and fear-mongering about hyperinflation. I just thought it was nonsense, and I wanted to do something about it, right? Well, on the inflation front, at least, we're seeing some encouraging numbers for August. So anyways, that's it for this live stream. And I hope you found it useful. And oh, by the way, so, if you like the content, give me a like, possibly even subscribe. It really helps me with the algorithm. I'm trying to break through, all the clutter on YouTube, try to deliver some reasonable economic interpretation and analysis. Not all the hyped up stuff that you see right now. So I would find it very helpful if you could help me along with a like and help with the algorithm. Anyways, so with that said, I'll see you in